Hello and welcome to another MCO market update on ADA. Here on the ADA chart, we're currently still on the larger time frame tracking this Elliott wave triangle. It is still valid, and I highlighted to you already a few days ago that this D wave so far is quite weak. So maybe we get another push higher towards like 78 cents or so. And there's a reason for that. So we are going to take a look at that on the smaller time frame. That's not just me making it up. There are some technical levels that we normally can, refer to. And so that might still be unfolding. And if you're new to Elliott wave, I mean, a triangle pattern is one of the most difficult structures because these change very often. They morph, they transform. And a triangle would be this, like an A wave, B wave, a C wave, a D wave, and an E wave. And then we can go higher from there, as long as this triangle obviously respects rules and guidelines. What we want is that the market holds above that C wave low of the triangle, which is at 51 cents. And in a triangle, we're normally watching for a series of higher lows and lower highs. For now, these are being respected. There is no break of support, no break below an invalidation point or anything. And the smaller time frame will probably give us a little bit more clarity. Important is to understand, and that's why I wanted to start on the larger time frame for those who are new. And also for anybody else as a reminder, I mean, if the market starts to break below 50, so if the market breaks below 51 cents, the risk will increase that we're testing lower support down here. That would be the next focus, these previous swing lows and the area, of trade here around the 30 to 35 cent area. But that would be an alternative for now. And I would need a break below that 51 cent area to confirm further. Until then, I think we get a little bit more choppy sideways action and could then see a fifth wave up towards $1.42. That's at least here around about where the previous highs were. That's the next fib level. And then specifically $1.72. So I'd say now let's take a look at the shorter time frame for ADA. That should give us some more clarity and some more, allows for a more detailed outlook, more fine-grained analysis. And here you can see why the idea is still that the market could get to like 78 cents, 77, 78 cents. And the reason is that when we track the move up from this C wave low of the triangle, I just shared it with you on the larger time frame. If we track the move up from that low that formed on the 7th of April, we can track it as an ABC structure, right? Where the A wave completed on the 12th of April, 13th of April, then a B wave low, and this would be a C wave up, and the C wave should be a 5-wave move. And we already completed waves 1 and 2. Third wave maybe a bit weak for a third wave. Then a fourth wave, and this fifth wave would be an ABC structure, A, B, C. That's the current idea. I could also, I could put this third wave here and the fourth wave here. That doesn't change much. So I explained yesterday in detail how that would, why I do it like that. You can see that the market reacted to the 78.6 retracement a couple of times. So maybe now we have started the C wave to the upside of wave 5 of circle wave C of D. That would give us a more healthy D wave, and it would allow the C wave within that D wave to reach the ideal target, and that's the 100% extension. And that's it again. That's at 78 cents. Yeah? So we're tracking here, as I said, the 100% extension. It's an ideal target. And as long as the market holds above key levels, I would still watch for higher prices. And the last level let's say the key levels that are relevant for support are 68.6 cents. But that's not even the most important one. As per previous updates, videos, and updates in our membership, the 67-cent level here is, in my opinion, the more relevant one. So as long as we're holding above that red line, focus could still be on higher prices. I would use that as a pivot to distinguish between bearish and bullish momentum. My view is, the pullback was corrective in nature, overlapping structures. The 100% extension wasn't reached, so it would still be ideal to push there. Doesn't have to, but would be ideal. The D wave, looking at proportions, is a bit weak, so all of that still adds weight to the thesis we might see another high. But it's also important to understand that I don't see it as a massive breakout pattern. Yes, higher, yes, into the blue zone, but then at some point we should start the E-wave pullback. That would be the next correction in the triangle. That's the update on ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, if you're interested in the membership, on our channel page, you can find a description of what the membership entails. It's a 2-minute video. For example, you get member-only updates. Today we covered Brett, Bonk, yesterday Pepe, Rune, and many more. You also get access to member live streams on Sunday, every Sunday, 5 p.m. UTC. You can ask questions, put in requests. On Sunday, I think I covered 40 coins in the member stream. We also cover now gold and silver updates as a bonus in our gold membership. As a gold member, you also get access to Discord, get additional updates, Tradingview live chat access, learning materials, and much more. Thank you very much. Bye-bye.